was.
We're live on Instagram?
We are live.
Wonderful. Wonderful. Gonna give it a few minutes, let everybody gather in. But in the meantime, welcome back to our bi-weekly webinar. My name is Thomas McCauley, your Director of Business Development. I am here with the one and only.
Yep, my name is Joe Pepe. Happy to be here, like always.
Yes, sir. Today we're gonna go over quite a few different things. Obviously, generally formulated around partnerships and our program that we operate. But we're gonna touch on everything from problems that your clients may be facing, how to identify them, the programs that we offer, the scenarios, whether it be useful, and pretty much everything in between. If you have any questions throughout this at any point in time, do not hesitate to ask. We will be looking to address every single question that does pop up.
Absolutely. I mean, like finding the valueship of partnerships is everything, right? You know, I feel like in this modern age, networking around and finding the right connections is the best thing to do to draw more business your way, find more revenue streams, and just have the best success moving forward.
No, absolutely. Absolutely. And in the age of the internet, it's extremely easy to do so. I mean, we're here on this webinar. You have a ton of weapons for you, just not only to attract clientele themselves, but like you said, strategic partnerships.
Absolutely.
Which is what we mainly focus in.
Yep. Like Tom said, our main role day in, day out is creating relationships and ultimately maintaining them, right? Obviously building the trust, building that factor, and finding the best way that we can work together, right? We're very open, our business and our model, to finding the best way that we can work with your business and then obviously any clients that are looking to refer over.
Absolutely. And at the end of the day, really, partnerships are all about providing value. Where we heavily provide value is solutions. So we have a ton of different financial solutions to help clientele. No matter what situation they be facing, there's a lot of different adversities when it comes to owning and operating a business, which I'm sure many of you do know. To really dive into it, I guess that's where we should really begin is what kind of problems are your clients really facing and what kind of programs could you really utilize to help overcome those situations?
Definitely finding and pinpointing the pain challenges is what I like to call the challenges, or even the success, right? You know, even successful businesses need to borrow money, and if they do it the right way, you know, they're going to have their rapid growth. But definitely identifying pain challenges at the end of the day. You know, for example, cash flow issues. You know, what are profit margins? What are things looking like that? Operational for the business. The difficult of as far as finding the right financing. Right. We'll dive in more specifically the value of leveraging us, as we're aware, right? Bank financing is super hard to obtain.
Absolutely. When it comes to specifically something like cash flow too, it can be very, very industry based. So if you're working around a lot of trucking companies, a lot of construction companies, staffing agencies, people who get paid on net 30s, 60s, 90s, even sometimes 120, that's where you can see a lot of issues with cash flow. They have to do typically material cost up front. They have to get the job done. They have to pay labor. They have to pay gas. They have to pay whatever overhead, all in the interim of them completing the project or completing their deliveries, and then finally getting paid from the vendors.
Yeah, I mean, like at the end of the day, you know, it's very hard to self-finance your own business. So when you have a lot of receivables coming in, like Tom said, that we're waiting to be paid on, it's tough sometimes for your business to support it. Right. You're waiting on a $20,000, $30,000, $40,000 check, but you also got to pay $40,000 worth of payroll. You know, right? There is that bridge that needs to be filled. And this is where the financing really can come into big place and a big role. To keep cash flow at an ideal stand, make your business profitable, and the continued growth.
Absolutely. There are quite a few different forms of financing that will really assist in that type of scenario specifically. One of the most notable being invoice factoring or AR financing. So there are a ton of different lenders out there that will give you an advance based upon the invoices that you're waiting to receive, with a small portion taken out once the invoice is paid. So it's an extremely, extremely easy way to be able to float that middle period of getting paid. Now, my preferred, most important, I think, the line of credit for that situation.
Yeah, I mean, like every business owner, whether you have an opportunity or you don't at the time, right, should have access to a revolving line of credit, right? One, an opportunity presents itself, a project you need a bid on, you need to buy inventory, boom, you have access to the capital, flick of a finger. or you just need money in the bank account. Payroll situations do come up and arise. So having access to a line that you have revolving money is definitely ideal for any business owner out there.
Absolutely. And lines of credits can be quite flexible in qualifications too,
Yeah.
depending on really the source where you obtain them. So bank lines of credit, depending on the bank, could be a little bit of a gray area. Your credit might not be there. Excuse me, your taxes, your financials might not be in order. There's so many different variables when it comes to getting a line of credit through a traditional bank rather than obtaining something from an alternative lender.
Yeah, absolutely. I mean, like, and just to really dive in and the value of Lexington, right? Before we kind of dive in on the specific products that we do provide,
Mhm.
is right those challenges, those pains that these business owners will face, right? Obviously, as we said, cash flow issues. We'll talk about the different needs for traditional options, how qualifications and financials, everything needs to be pinpoint for traditional banks.
Yep.
And then startup funding, right? Startup
Yes.
funding is super hard. But that's where Lexington really drilled down, found the right program to give flexible funding to startup companies that have pre-revenue.
Absolutely. There really are only a few sources to where startup companies can go to get access. And by startup, we don't just mean that pre 2 year threshold.
Yeah.
We also are referring to genuine startups, pre revenue, just opened up their business the other day. Now they're looking for a little bit of capital to get the thing up and running.
Yeah, yeah, a lot of people deem startups, and especially in the traditional world, a business that's 2 years or less, right? Businesses we see across our table, maybe 1 year time in business, and they took off. They're
Yeah.
doing millions already. But someone like that is still not bankable because the time in business is so low. This is where the startup programs, the alternative solutions really help kickstart this business to grow and then to become bankable when the time comes for a time in business.
Yeah, absolutely. So, I mean, that's always an option. I know a ton of other funds, even ones similar to ours, have a bunch of startup inquiries that they have no idea what to do with it. We can help you out there, as well as that they can also utilize a cosigner for the financing and have it still all be on their brand new business,
Yeah,
helping them build business credit for future fundings to come from other
beautiful,
sources.
beautiful, beautiful. And just to kind of touch on different challenges as well, I believe the biggest challenges business owners face is not knowing what is out there, what
Yeah,
options are actually available, right? As a business owner, put it in perspective, you're great at your trade. You know exactly how to build this building. You know how to drive this truck, right?
yeah,
They have no idea what financing is about a lot of the time. So this is where Lexington plays a role. Yourself as the partner to be that trusted advisor to steer them in the right direction. And that's the beauty of our program, um, to build this trust factor.
yep. And like you said too, the the principles of these products and how they vary a lot of the times they don't really know exactly what program is going to be the one to help them the best. We have some clients who come to us looking for SBAs, but
Yeah,
really a line of credit is more suited for what they're looking for, or a term loan is more suited for what they're looking for, and vice versa. So that's where, again, like the providing value within just a few moments of talking to the client, understanding their needs, their timeline, what it is exactly that they're looking for, is when we can really start to pinpoint which program we should really be attacking first.
absolutely, Tom. Yeah, no, it's big facts there. But just to just to dive completely right into that, I mean, why partnership matters, of course, right?
Yeah,
You know, why partnership and finding the right connect, especially with Lexington, is everything. So let's dive through kind of like what that looks like as a partner yourself to connect with us and the whole process there from onboarding to leveraging our platform, what kind of programs that
mhm,
we do provide, and most importantly, providing value to yourself and giving you more revenue streams for your business as well when we do get these clients to finance them.
absolutely. So I mean, onboarding, very straight, simple to the point. You have a conversation with me, Joseph, or our other three partner relationship managers. We'll talk to you, learn a little bit about your guys' operation, understand how you source your
Yep.
clients, what kind of industries you mainly work with, what kind of programs that you may be specifically looking for. And then from there, we fill out very minor paperwork, and then you're all set up, ready to fund with Lexington. We don't charge any fees to become a partner. We don't charge any fees to have access to our portal, so that's all free of charge, obviously. And then from there, submission can be however you really feel. We're very flexible in
Yeah.
that realm,
Oh yeah.
from text message chats to email threads to portal submissions to, hey, I got the guy on the other line. Can I three-way him in right now? Whatever causes the least resistance to get the client over to us, we're more than happy
Yeah.
to conform to.
Everyone's different. Everyone has their own system, and we're very flexible, like Tom
Yeah.
says. Just like however works best for you guys to send in business, or even just get on three-way calls, like Tom says. If even we don't have any documents, nothing at all, you know, have three-way calls. We'll go through our whole spiel, our pitch, gives you an idea exactly how we do work, and gives you that trust factor as well, you know, behind that
Yeah.
at the
Each,
same time.
each and every single one of us
Yeah.
are really a tool for you, or a weapon, if you will.
Yeah, definitely.
You can give us a shout at any time, ask any question that you guys need, as well as that scenarios. Scenarios are huge. That's where, honestly, some of our best deals really come from. Get one of our partners gives us a shout, say, hey, I have this client. He's looking for this type of financing at this
Yeah.
dollar amount. He makes X amount a year with this credit. And then we can kind of just go over and game plan before we even get near talking to the
Yeah.
client.
Going over scenarios is everything. I mean, like things will look different once we start securing the documents and the financials, of course.
Mhm.
But just kind of giving a base touch of what's going to be realistic and what's not, right? Because we never want to put options in front of any client's face that makes zero sense, right? It's a waste of time on our platform. It's a waste of time on your platform, and also it's just a bad reflection on everybody. So also having real conversations with owners of where they stand based on their financing and what type of financing is actually available is definitely key to building trust factor here.
Yeah, like we like to say, we don't like to put a round peg in a square hole. Like you touched on, it also, like you said, it builds like a different level of trust, really, when you give correct and accurate expectations to not only the partner but to your guys' clients as well. It makes the sales process much smoother. It makes everything just a lot more transparent, and it makes the client a lot more comfortable to go with us rather than to go another company or the next guy who's calling them.
Yep. And just to piggyback off everything, once onboarded here with Lexington, right, you're going to be assigned to a designated partner manager, but also more importantly, a senior rep. And this senior rep will typically be the ones working directly with our underwriters to present all the options, negotiate, and make sure everyone's on the same page and in tuned.
Yeah, absolutely. That's very advantageous as well, because you now have 2 points of contact. Also, you know that there's two people at all times working on your file, so nothing ever goes missing, nothing ever lags. You're always going to have someone to reach out to, people who are going to be able to answer your questions and give you updates at any point in
Just
time.
having, I'm a very hands-on person. There's gonna be other people that we partner with. They're like, here's the file. Let me know when it funds.
Yeah.
I'm like, cool. And then right, I have other partners, business consultants, private equity firms, you name it, right? They're very hands-on. They want to be involved. They have a good rapport with the client. This is where it triggers my brain. All right, now you're more involved. I'm going to give you religious updates along the way, because we'll go into it. We have programs that can fund in literally 24 hours or 5 hours.
Yeah.
And then we have programs like SBAs that may take a month, right? It really ultimately just depends. So some updates will come instantly, and some updates will be dragged out, which we want to keep you in the light. We definitely never want to keep any partners or any clients in the dark through the process.
Yeah, that definitely comes with the expectation too. If I'm talking to a partner, I'm like, hey, listen, SBA might be the way that we're supposed to go with this. He doesn't really have a specific timeline or deadline. He's got time. He wants the cheapest money. It's going to take a couple weeks. Just bear with us. You know what I mean?
Yep. Another obviously key benefit, of course, like what do you guys get back? Obviously a revenue share split, right? So throughout all our programs, right, we share a revenue share split upon funding, doing complete ACH wire, right, to whatever account we want to put on files. Beautiful thing about us is that we pay on residuals.
Yes.
Right. So repeating customers, renewals, they pivot to a different program, right? Someone got a line of credit, maybe we'll go in SBA, right? It's your client for life. They're in our system. It's in your portal. They're tracked. So anytime they do come back in the pipeline, we do give you that residual income, even if you send a deal a month, right? It does not matter. There's no qualifications when it comes to that.
Yeah. Another great thing I think about our platform specifically, everyone loves a one-stop shop, from not just the clients, but the partner's perspective as well. So it helps with client retention so much, because you could have one client who maybe they needed quick capital. They go for something alternative. You know what I mean? Now they got what they're looking for, and they're looking the other way. But when it comes to a platform that we can cross-sell so heavily on, we could get them the quicker capital while working on something like a line of credit. So maybe the next time they're pressed for capital, they have that right there to be able to draw. So while we're setting them up with all these different forms of financing, both alternative and traditional, we're getting paid, you're getting paid, the client's going to have access to the capital whenever they need it, and they're going to be infinitely happier with you as their advisor or their initial point of contact.
Yep, absolutely.
For bringing them to a place that has every option. You know what I mean?
Yeah, I mean, like, and also just put it in perspective. Providing another revenue stream is always ideal. Everyone wants another revenue stream, right, in this life. And it could be even a situation you never even thought about offering business funding, but you're working with self-employed companies or individuals, right? Just having this on your platform as a back pocket and having a source to go to is really all we can ask for, right? From there, we're going to work this deal properly, have a communication at all times, and be very transparent.
Absolutely. And the one thing about business owners and partners that I love to really bring up when I'm talking to them, just being in this industry for so long, we come to the realization that, like you said, business owners, no matter how successful, are always looking for capital. So really, it is only just an extra question that you have to ask. And if they're already trusting you as an advisor or a fractional CFO or a consultant or a coach, they're going to be infinitely more open speaking to you about financial needs or financing for expansion or equipment than they would be pretty much to anybody else. So it's a very warm dynamic in that fashion. That's going to just give you access to a whole bunch of different opportunities.
And like the trust factor is always there, right? At the end of the day, I love what I do. We love our division.
Mm-hmm.
Our division is a huge part of Lexington's success is partnerships, because we understand at the end of the day, referrals is a warm handoff.
Yes.
Typically when referred over, it's already trusted, right? The client has a trust factor already. Process makes everything easier. So we're definitely very grateful for that. What always amazes me though, right? Because we'll be working with clients for months, kind of like a little story here, and something's going wrong, or they don't like the terms or whatever. Instead of relaying the message to us, they typically go to the partner first because they trust you. You're the first point of contact. So that just shows you the value. Even though they're working hands-on, we're the finance company where we pull the strings, right? They're going to typically probably fall back on you at the end of the day because you're the trusted partner. So always making sure our communication's on page. That way we put our best foot forward. We understand, hey, this option's not working. We need to pivot, right? So we're not, like Tom said, we're not going on wasting everyone's time. You know what I mean? So that's definitely ideal, is having that communication.
And that's a really cool thing that you kind of brought up there too, that I love. That with the communication, it's a really big thing because we work with a ton of different financial institutions as well. From companies who strictly do SBA and they use this for other products, or strictly do alternative merchant cash advances and use this for other programs. So when it comes to the cross-selling, we can customize it. You know what I mean? So if you're someone who does predominantly cash advances and you're referring someone over to us for SBA, obviously we're going to ask you if we can pivot to lines of credits or term loans or 0% interest business cards, whatever the case may be. So you can really tailor with us what it is that you do need. And on top of that too, a ton of other financial institutions who are cash advance focused still typically do use us because of just the platform that we have and the lender selection that we have.
Yeah, I mean, at the end of the day, we're never going to step on your toes. So if you offer a product that we offer, right, it's yours, right? Right. We're going to have that conversation, get approval if it's okay. If not, right, shake hands. We never want to step on your toes and interfere with business, right? We do business the correct way, very transparent. Because at the end of the day, right, we're a financing company, right? We are looking to grow our business as well and be around for a very, very long time. So the trust factor, the transparency is right off the get-go.
Yeah, I honestly can't even count the amount of times where we'll be in like the SBA process with a client, and let's say Nick from our SBA team will call the client and they'll be like, hey, listen, like I need money tomorrow. Something happened, an opportunity arose. We're calling you guys instantly, like, hey, so-and-so is looking for financing quicker. Do you have options for that? Do you want us to handle it? What do you want to do here? You know what I mean? We just want to make sure that everything falls in line with how your process goes, and we can work around pretty much anything.
Yeah. Let's go over just a quick overview of all of our programs, just key points, the value of each program, because like we said, every program has its specific niche value. In certain situations, this program makes no sense, but it can also make the best sense. So finding the right program is ideal. Let's talk in a whole about alternative financing, right? In alternative financing, there's going to be different type of lending facilities.
Mm.
But we'll talk about each facilities quickly, and how they're underwritten and timelines.
Yeah. So the alternative financing space is honestly probably my favorite because before working in the industry, I didn't even really know it existed, which is
Yeah.
also very common with clientele. They don't even really know that these options are available. So alternative financing, kind of the banks say no, we say yes. And if the banks say yes, they might still take too long. And that's really where I think the heaviest value comes in with alternative financing is simply just timeline. If you have a client, they could have 800 credit score, be doing $1 million a month. But if they need money within a very confined period of time, unless they have some other facility set up, a bank simply isn't just going to do it. So that's where alternative financing can be extremely, extremely clutch.
Yeah.
As well as that, credit requirements, documentation, all very light, all very flexible. They even do offer line of credit options as well.
They do. When it comes to alternative funding, just to kind of deeply break into it, it really comes down to the revenue
Mm.
and the business and the cash flow, right? So it's really going to be only eligible for established businesses.
Yep.
And what I mean by established businesses, we can run with someone that has 6 months time in business. As long as there's cash flow running through a business account, it's going to unlock different funding options.
Mm.
And like Tom said, the point of alternative lending is speed, the access to the funds, and very low documents,
Yep.
right? No traditional bank is going to provide term loans, lines of credit without financials, and typically immaculate credit.
Yeah.
You know what I mean? Like you can have a 750 credit, but you may be late on your house. Probably not going to get any traditional options, right?
Yeah.
So having alternative on your back tool is ideal. So right in this space, we're going to be having alternative lines of credit, right? Which
Yep.
is just revolving access to capital. As you make payments, it goes back towards your facility. So they have it for the life of the business. What's amazing about alternative lines of credit to our partners is we get paid every single
Yeah.
time the money's drawn. So it's a nice residual income, right? The point of being in the financial sector, as a partner, as a partnership, is to have residual income, right? Because you can only continue to develop new business for so long. So you
Mm.
need to have repeating customers. So an alternative line is a great product for revenue streams, but also the most ideal product for business owners because
Yeah.
it's a revolving access to capital. They have the ability to pay when they want to use it, and it's available click of a finger.
Yeah. In certain scenarios where an alternative line or alternative funding source would make a little bit more sense than something from a bank or SBA.
Yeah.
It's not always really timeline based. While it is very, very amazing for people who need money quickly, it comes into play with a lot of different scenarios, whether or not they're in an unfavorable or unbankable industry. Sometimes people run into problems with that, or um, they don't have their financials in order, or they haven't
Exactly.
filed their taxes yet. Whatever the case may be, that's where you can really work around with the alternative financing. And on top of that, one
Yeah.
of my favorite things about it is you, as a business owner, really do have the opportunity, especially if you have a good broker on your side, to plead your case. These lenders will listen. They'll take
Yeah.
they'll take your situation into account, and they'll
They're not black
disperse an
and at the
offer.
end of it, they're not black and white like a lot of bigger banks. They do listen to the story. They do understand, some months may be slow,
Mhm.
right? They listen to that story, so that is huge. I mean, like alternative lending in a whole, because I know we're talking about how it's good for people that are not qualified for bankable products. Even the very qualified clients is very unique for alternative lending because alternative lending is unsecured money.
Yeah.
So this does not interfere with senior lending. And when I mean senior lending, it's a traditional position. So you may have someone that is very bankable. They have lines of credit, term options with their bank, their senior lending. Alternative solutions, they're unsecured. So they
Yep.
come right behind your senior lender. It won't interfere with that type of financing at all. So it's a great way so they can get more injection of funds at a very quick speed.
As well as
Yeah.
that, the debt that you do have out already with the senior
Yeah.
lenders, it won't affect the approvals from the alternative side as well. So
Absolutely.
if you're doing the revenue to qualify for $1 million, even if you have $1 million out with Bank of America, $1 million out with Chase, alternative lending is not going to look at that. They're going to take into consideration your revenue that's going into the business, the cash flow, average daily balances, how many deposits you really do, are all really the main core underwriting factors of what goes into an approval.
Yeah. Yeah, absolutely. Let's switch over to more of the traditional side. We'll briefly speak on the startup program,
Yeah.
right? So, when it comes down to startup funding, like we said, we're pre-revenue, 1 day old, or even the same program works for established businesses. It's all credit driven.
Yep. Absolutely. So we have partnered up with about 30 different national and regional banks in the United States.
Hmm.
So when you refer a client over for this form of financing, the only document we're really going to need just to get a pre-approval is just a credit report, either from them or from a trusted person who is willing to co-sign for them. From there, we'll take a look at the relationships they already have, the limits that they have on those cards or lines of credits or auto loans, mortgages, really just a grand overview of the genuine strength of the credit report. Through our
Yeah.
experience and technology, we understand a general pre-approval around where we're going to be able to fall with dollar amount. Now, the startup financing. So it comes in the form of 0% interest business credit cards. Extremely advantageous, extremely cheap, very, very, very easy to qualify for. And I will say,
Yeah.
honestly, the most perfect option for a company that really isn't generating revenue. You're able
Oh,
to
it's perfect. Yeah.
utilize this flexible, reusable capital at 0% interest.
Yeah, I mean, you jump away to using your personal credit, your utilization,
Yep.
and now everything is to the EIN. And this program reports directly to your business bureau. So it builds up your scores. That way, your SSBS score, right, your small business scores, become stronger. That way, when you do start making, what's the word? Revenue.
Yeah.
There we go. When you're making revenue, good, consistent cash flow. Now your financials, your taxes in order. Now SBA options are going to become available here.
Absolutely.
Yeah.
Absolutely. I briefly did touch on it, but I do want to backtrack a little bit. When it comes to the trusted cosigner, when they do cosign for you, all of those accounts will still report directly to the business, directly to the EIN. None of the
Yeah.
utilization nor the account itself would be on either your personal credit or your cosigners. But I did want to touch on what you said about helping building business credit and really allowing you to gain access to better forms of financing in the future. When it comes to SBA specifically, the SBA is extremely advantageous. Does take a little bit more
Yeah.
time depending on the dollar amount. There are quite a few different programs built into that SBA 7A working capital type of position. But the E-Trans score or the SBSS score, extremely crucial. Certain lenders will not allow it to fall below a certain point, even midway through the process. So it's
Yeah.
essential that you do have that where it needs to be.
Yeah. No, that's big time. So just having it in your back pocket and just the different options is definitely key. And then the most premium product that we really do offer, and just to briefly touch on it, 'cause I know we're running out of time here. Time
Time
flies.
does fly.
Is our SBA Express and also
Mhm.
bank term options,
Yes,
right? 10-year options across the board for our term options, SBAs, right? SBA is going to be government backed, and the Express program allows us to get the funds within a month. It's a super
I've seen as fast,
fast
honestly, as a
program.
week or
Yeah,
two. Honestly,
yeah. And the SBA Express program, we love it because it's deemed as working capital.
yep,
So it flies off the table. You can use it for consolidation. You can use it for a buyout, a new venture, right? You
yep.
name it. It's working capital. It's loose money for your business.
Absolutely, absolutely. And then to the bank term options, quite similar in the way that they're structured. Honestly, a little bit on the shorter term side of things in comparison to an SBA. Typically, an SBA will be somewhere around a 10-year note,
Yeah,
whereas the banking term options are floating around 5 to 7,
but yeah,
5 to 7 years.
we
Generally,
do we do have one option that goes up to 10. We do, but yeah, typically 5 to 7. But we do have one bank that can go up to 10, which is fascinating.
they generally follow kind of the same dollar amount parameters. So generally, when it comes to the traditional banks as well as SBA is a little bit different because there's like a little bit more that goes into it. But the banking programs will generally be able to disperse anywhere from 10 to 20% of gross annual revenue.
Yeah,
Um, so it's very advantageous as well because the way that they act is kind of similar to cash advance lenders. Funny enough, if you get a term loan from, let's say, Chase, right, and they set you up with $150,000 at WSJ prime rate plus 1 or 2, other banks will be more than happy to come behind them. Regional banks such
of
as,
course.
like Citizens or somebody would be more than happy to come by. So we can also get multiple different term loans and multiple different lines of credit from multiple different sources. And they're all more than happy to work
Yeah,
together, getting you the maximum dollar amount at the cheapest rate and the longest term. And if it's a line of credit, forever evolving.
Awesome. Yeah, I mean, like at the end of the day, right, just leveraging Lexington's platform is everything in our partnership. So, right, whether you're a business consultant, a credit repair business, an equity firm, right, you name it, etc. Right, we're definitely here to be your backbone, provide more value to your platform. You know, whether you have one deal a month or 50, right?
Yeah.
We're here to, build your clientele, build that trust factor, provide more revenue streams. And get the best financing possible.
One last thing I will leave you with, you guys. We didn't really mention it. We do have an absolutely wonderful retention team. So when you do refer over clientele to us, they're not just gone in the dark. We have a customer service team that consistently reaches out to them, asks them questions, see how they're doing, gives them advice if they need advice on anything that has to do with their business, whether what to do with the money, how to structure their bank statements, what to look out for, what the do's, the don'ts. So there also will be extended reach out afterwards to make sure that everything is going well with your
It
clients.
comes down to communication and staying in front of your clients.
Yes,
Yeah.
yes, sir. Well, thank you guys all for coming. Again, my name is Thomas McCauley, the Director of Business Development here at Lexington Capital Holdings.
Great to be here. My name is Joe Pepe.
And if you guys have any questions at all, do not hesitate to comment, message us on LinkedIn, Instagram, Facebook, any social media. We'll always get right back to you. And we're more than happy to help you guys out.
All righty.